Hey everybody, welcome back to another episode of the Brian John Show slash podcast. Today we have Mr. Yun back on the show. He was our you were my second guest. I had Dylan first. For a brief background for those who don't remember, Yun is currently working at the Googles, which provides me with YouTube ad revenue, and he previously worked at McKinsey as a consultant. He actually has a PhD, and he's super smart. Yun, thanks for coming.
Thanks for having me, Brian.
Yun's been bugging me to do this for a while, and then I was super busy because NFT never sleeps, and I think there's no better time to talk about the economy and everything that's going on. He's actually been kind of predicting this for a while, and by a while I mean like a while. I remember that one time, Young, that you came over to my house before I left Chicago. Like I want to say like June of last year.
Yeah, last year. Yeah.
And we were at the at my rooftop or whatever, and you were like, yo, like slowly but surely, like things will come down. People are gonna have to come back to work. Big tech is like overspending. All these companies that have I think the punchline you said, I was like, holy shit, was you were like, all these companies that have no cash flow are getting these crazy valuations. And at the time I was like, but like these stocks are still doing well. Like, I don't know what would cause all this to come tumbling down. And here we are with Bitcoin, under 20K now, and everything coming to a standstill. And I've actually been getting a lot of DMs saying like, are you okay? Because my entire like breadline depends on this stuff. That was a big, let me check the Bitcoin price. Oh, about 19,771. As a big tech person and as a consultant, I was starting a year ago, and I guess you like value companies. What made you think such things over a year ago? Because frankly, when we were talking, back a year ago, like things were great. Like that during that conversation, that was like peak, like financial performance. Like companies were doing great.
Yeah. What made me think about that? I think if you talk to any business leaders, when you're at your peak, that's when you actually have the most sleepless night, right? Because peak is defined if it only comes down, and it does come down after a while, right? So if the market is doing so great, you got to think about, how do I continue that momentum? Or if it comes down, what's going to happen to my business, and am I prepared to do it? And for me, it was just looking at what companies and what stock are actually driving up the market valuation. There's just been a lot of VC-backed companies that are coming into the market. And obviously, like I'm not a wealth manager or financial expert on this, but just reading up on and just looking at and talking to my network about these things. And you start to realize some of these growth stocks or, hyper growth based companies are making into the public stock market. And their promise is that they're going to grow, I don't know, 10, 20, 100x. They'll eventually become profitable. And they will cite examples like, oh, Tesla, Amazon, whatever, never made money for 10 years, but look at them now. I think in a way, it's a little bit of a perfect storm, because you and I both know definition of a unicorn is 1 in 100, 1 in 1,000, 1 in a million. But if you look at number of quote unquote unicorns that has been tagged in the last 2 years, it's probably more than all the unicorns combined in the history of VCs in a way. I don't know. I'm just speculating, but I just heard more about unicorns than I've ever did in my life. So, and that just triggers that if the probability of unicorn is somewhat fixed and is very, very low, but then I see dozens of them coming into the market in such a short period amount of time. One, some are misvalued as a unicorn, right? Tagged wrong. And number two is the fact that a lot of these companies have a business model that's geared on transactions. So they create a platform, they link whoever wants to sell or buy stuff to someone who wants to buy and sell stuff or provide the service.
Sure.
And it's really just a game of exchange, right? You could say that Uber operates that way, DoorDash operates that way.
Yep.
Even, I don't know, your NFT platform,
Hyperspace operates that way. Correct.
Is based on that. And for me, it's like, okay, so you're going to create an exchange where there is a market. That's great. The question is, if you scale that exchange, do you actually gain profitability? Yes or no? And that's been tossed around a lot of questions, especially companies that started doing this. And I mean, I don't know the answer. Maybe if you reach scalability, you can become profitable. But how long is the market going to wait for you to realize that? Thing is, if you look at Tesla and Amazon, there were early believers who invested in, but it wasn't the whole world until it's only when they scaled and they grow and then show the momentum, the world really believing in it. You enter the stock market with such high hopes, with such high valuation, and now the expectation is for you to deliver that, I don't know, in the next 2, 3, 4, 5 years. What is the appetite for the investor to keep investing or keeping that money there for the next 5 years? Versus now that they have access to the stock market, what's preventing them from selling their stocks right now?
Sure.
When the stock price potentially already bakes in the future potential in today's prices.
Sure.
Right? So I think and then money was cheap too. Interest rate was all-time low. But it's all coming back to the fundamentals of valuation, in my opinion, right? Like the way I learned valuation was you have to look at the cash flow and the future projected cash flow. And if the future projected cash flow is really, really healthy, then your net present value of the company could be positive, and then it could still be a viable business. But you also have to look at the drivers of the business too. So to get the net positive cash flow, what are the things that this company will do to actually get there? Top line growth definitely helps, but like top line growth, not everything that you scale will also scale the cost of doing the business. There's also variable cost. So if your variable cost is going to grow at the same scale as your top line, it's not going to make any dent to your cash flow in a way, right? So I think at a high level, when I think about a lot of these companies that have quote unquote made it, customer focus oriented, it does leverage some of the latest tech. It is a platform exchange base, and it makes sense. A lot of people are going to use it. And the question that I had in mind last year was, are they ever actually going to make money?
Sure.
And if the government was backing this as a service, like public transportation, for example, really hard to make money, but it's there because it's good for the society. It's good for other things, but everyone may know that like it's really hard to make money in those transportation systems. There's a reason why government may want to own that things. And so it goes back to like, are these some of the things are being created for the benefit of the society and convenience, but is the society going to pay necessarily for those services enough that these companies will make money?
I've a range of thoughts that I will just play simple like devil's advocate here. I think while I agree with all your points, and I think you hit one of my like rebuttals in the last point. If you do hit a critical mass of that, I'm just going to simplify it as transaction, and you're taking a cut of that, and as long as that transactionary market exists, then I think you're fine. And in a proven out prime example of this that I've been personally a part of before is financial services. No, like professional services. You've been a part of professional services where these companies take very, very small cuts of massive transactions, and they continue to do very big business and have insane cash flow year over year because their variable costs are not very high because it's personnel. I think it's almost the same way with perhaps not Uber because they actually have to pay their drivers and whatnot. But like when it comes to transactionary services, and obviously I'm biased as someone that is working in a relatively what you're describing model, then like you could argue that unless that entire market goes away, those products are valuable. Granted, like, are you building anything? Probably not. But like theoretically, for example, in the Solana NFT market alone, whether or not people are surprised by this number, like even at the current shit price of like $30-40 a soul, there's like $5 million worth of NFTs being traded a day. If you capture, I don't know, some part of that market, let's say even 100% of that market, and your fees are 1%, that's what, $40,000 a day, like almost not flicking a finger. And it takes really low cost to maintain, whatever you need, like, 5, 10 engineers, and you could continue to scale as long as that market like continues to grow. So I would argue that yes, like I think in the long run, sure, like because you're not building any products or services like at the core, you could argue the business means nothing. But I think if the pie is big enough, the like taking a cut model does work. You could also argue that Amazon, aside from Amazon Web Services, which I understand is a majority of their value, but that came afterwards of them establishing a company as they're also taking a cut. Like that's their entire business model, right?
Yeah, but if I go back to the Amazon, there's 2 points here. I think you understand it. As you mentioned, as long as there's a demand for it.
Sure.
And so my quick analogy is look at what happened to Coinbase. Transactions, the value of the Bitcoin drops, your entire pie just shrinks, right? The difference between, I would say, like NFT Bitcoin exchange versus a stock market is the stock market still very much operates on assets, like almost the real assets that are backed, that has inventory, that actually gets audited, that gets reported. And then there is some sort of insurance and claim that you can go against some of this. Whereas Bitcoin NFTs are still very much in the early stages where exchange of these to the actual real life broader goods and then ability for you to swap Bitcoin into another asset other than other forms of crypto is not that liquid, right? So if the market starts to tank on an asset that's not liquid, well, you're stuck with it. All you can do is just basically sell at that price to other people who may or may not want that asset. So that's number one. So I agree with you. If the market keeps growing, and if there's more and more people buying into Bitcoin, believing in NFTs and then all that, sure, that's the dream. But the other things, you're also at the mercy of this whole thing crumbling at one point because there's no flexibility in that system. So that's one. And number two is what I was going to get to. Amazon. Well, it's just interesting you brought that up because my personal thought is Amazon's more of a logistics company than an e-commerce company, right? Like the way that they were able to grow was also free shipping and you're getting shipments on time. So they really doubled down on that part to actually grow. Anyone can actually build e-commerce website. And by the way, that has been the case. Like Walmart, Target, they have their own website now. They also deliver. But the fact that I still order stuff from Amazon is because I get free shipping and it comes in the next 48 hours, most oftentimes. And so if you think about, and logistics is one of those spaces where it's kind of, you can actually scale a lot in a metropolitan area. Rural area is different. But given that the trend is that more and more people are, being urbanized, and COVID set that trend a little bit back, but urbanization is still going to happen. And I think the data shows like, I don't know, 70, 80% of the people live in urban places anyway. So if you're able, your website's still there, but if you're able to get those people to buy more stuff here, it's actually driving my costs down in a way, because I gain scale in logistics, right? It's not 100% scalable, but there's some scalability baked into it. At the end of the day, the margins are still razor thin in this buying and delivery service. But the fact that you are generating hundreds of billions of dollars, making low single-digit margin still is an achievement in my view. That has always been the case for a lot of retail companies, but to be able to do that in hundreds of billion dollars in scale without any actual retail stores is impressive, right? And the fact that you could argue is like, well, they have their own warehouses and this hubs and everything, sure, but the model is very different. It's not like I can actually go to the warehouse and browse for stuff and pick something up like you do at Walmart or Costco. You do actually have to get delivered. Delivery is free. If you pay more, you can get it the next day. I think it's a good convenience factor for people to do it. And for me, that's sticky. The business may not make 20, 30% margins, but sticky, reliable. And if you think about it as an investor, like it's like that same analogy as oil companies, even like 10, 20, 30 years ago, right? Like the reason why you would invest in Shell, BP, or Chevron, or whatever oil companies out there is that there's always going to be somewhat level of a demand of people buying gasoline because they have to travel for work and everything. So it's predictable. It's all about the predictability. And what you can't predict, though, is your market. Can you predict where Bitcoin or NFT is going to be even a year from now?
Of course
With
not.
certain, yeah, that's what's causing a lot of these volatility, right? And a lot of that, if you look at a lot of companies, there's a lot of hype. There's a lot of digital marketing that goes into, right? So to be able to generate that user base initially to let your platform thrive, you need to be spending the dollars and networking so that people are aware of this and they start investing. And it did, but it's in a condition where market is no longer bullish.
Sure.
People will start to doubt, okay, what is the future prospect of this particular investment? And if it's murky and they don't know, as a human being, naturally, I'll try to hedge that right, into a more stable asset.
Okay, then the like natural progression of question is, just as the internet boom happened in the early 2000s, and you saw, I would argue, 99% of those businesses are no longer around or not in the shape that they were there. Are you of the belief that all these venture capitalists and all these retail investors are, for lack of better words, and this is my words, not Young's, but are they idiots / are they unbelievably smart that they're gonna all get out at the right time? Because I would argue, I've spoken to a fair number of VC investors, and unless they're miraculous actors or they've convinced themselves enough where they've bought into their own lies, to me it seems like, yes, of course, at the end of the day, everyone's trying to make their own bag and make money, and I think there's nothing wrong with that. But I would argue some of them, some of the decent ones and the very smart ones, actually do somewhat believe that something revolutionary or innovative will come out of this wild west of making money / like crypto or whatever. It's not just about making money, but they believe that there will be real world or metaverse or whatever applications through it. Like, is your belief that all these guys are either getting tricked themselves or tricking others to make a quick buck? Because clearly many of them have been investing for a while, and obviously you're smart, but I would assume many of them are just as smart, and they should also recognize that this is not sustainable and solely anticipatory.
It's a hard question to answer because there's a multiple layers to it. And I don't want to get into ill intention, right?
Sure.
There are always going to be investors, people who will sell you things because it benefits them personally. And it's almost like defrauding the investors in a way. And I don't think VC is immune to that. Theranos was just one example, but I'm pretty sure there are others out there that even in the past that actually made it to this level of press. Taking those VC investors and startups aside, right? I don't know how big that is, and I'm hoping that it's not that big. And then it comes down to, in my opinion, what you believe the future is going to be. And how realistic is that vision based on where you see the new innovative technology or business model evolving in a market? And that's all speculative, right? And I think for me, the biggest distinction there is it's just a reality check in a way. So if for me personally, if someone comes to me and say they promises that the world is going to work this way, and then if we do all this right now, then the company will become profitable at this stage, that's a great vision. But if you state that vision with such certainty, I start to doubt you, right? Because nobody knows what's going to happen 5 years from now. Like, nobody could have predicted COVID before it happened. Like, anything can happen. But the fact that you are so certain that this is going to make it and you're going to be profitable, like, those two are very decoupled equations too. Like, you still can be profitable. Your business can transform to adapt to the environment to become profitable. And there's a lot of companies that have done that to become successful. And business may change course because the macroeconomic condition doesn't allow you to thrive in that environment. And as a business leader, that's what you got to be thinking about, is that you currently have a business. This is how it works. This is what fuels my business and how I make money. My scenario one could be that I keep making strides and then I do my job well and the business grows and it becomes profitable. That's probably the vision that most company may have. But in reality, it could be 2-3 years down the road, something shock happens, happens, new technology evolves or whatever. People's behavior certainly change, like you happened in COVID. You may need to rethink, okay, is my business missions and value still applicable to the current environment? If it is, how do I need to transform my business and bring the technology enablers to achieve that mission and become profitable? So it may, stay on course, great in 5 years, but with all these shocks, it may take 10 years. Now, as an investor, I'm thinking, okay, this person is already thinking about different potential pathways that'll come and how you would mitigate certain risks and things that are external factors outside of your control.
Sure.
For me, that's more believable, right? And when it comes to, like, there's reason why there are startups, angel investors, and series of rounding before you actually go to the public. Because once you get to the public market, you will get scrutinized, right? Like you do need to audit, you do need to report on you, and you can't defraud the investor by telling them lies anymore. You need to actually give them facts and where you're going and I think that's where in the last 2 years, in my view, right? And I don't have all the facts behind it, where some of those investor presentations and audits may have been slipping in a way.
Sure.
And also the public perceptions of valuation has eroded to future growth and profitability promises versus looking at really in detail what the company is doing today and are they actually on track to get there, right? Really unpacking. And I would say some companies are more scrutinized than others in today's public market. That's just the nature of, there's a lot of companies that are listed in the stock exchange. So going back though, again, if you are a VC, you have an option. Like you don't have to stick all around. I mean, that's why some VCs like enter a Series A and then they're no longer there for Series B, vice versa. Some enter at the later stage. It really depends on what you believe and where you want and where does each VC investors add value to that stage of the company. I'm pretty sure there's very few VCs that goes all the way from like at the start to all the way to the end. Right? So, and it's really up to the founders or whoever the largest shareholders to bring the right VC in so that they can actually achieve what they. So on a premise, I think it works. In reality, though, there will be greedy investors. There will be sharks, right? There will be founders who founded a company for personal gains rather than achieving the mission. I wouldn't wipe that off the table. So you start putting all these factors in with everything that I mentioned, you already have 10 different scenarios where the company could go. But the only one path that people believe in and think about when they think about startup is actually not company failing. They only see the good cases. So they say, look at this founder, has a vision, all these great investors lined up throughout, and grew massively from first year to fifth year, took the company IPO, grew even further. Now it's the next Amazon and Facebook. You know what? Those companies come in like 1 in a million, I would say. But that's I would say like most people that don't know about this landscape, when I talk to them, they think about that. It's like, oh, that's what the VC landscape and startup landscape is. In actuality, most companies make Series A, Series B, not even, and fail. And even if they do make it to IPO, it's not guaranteed to be successful. Look at all the companies that went through SPAC and also companies that IPO'd in the last 4 or 5 years from the tech space, right? Look at their stock prices. They're down by like 70, 80, 90%. Look at Bird. Bird was once valued at what, like $9, $10 billion. I think they're 100 million right now. Their stocks tanked like 95%. So like, that's where the whole bubble notion comes in. Like, I would argue, like, can you imagine big companies, big stable companies, like, I don't know, Walmart, Amazon, or like, I don't know, Intel, like any big companies going from stock devaluating 95% in the span of 2-3 years? Absolutely not. Unless there's like a major scandals and fraud that happens, right? But because you believe in the business model, and then you know where the demand is coming, you know what the company is actually delivering. They're listed. You can actually look at their investor presentations and you can trust it. That's the important part. You can trust it. But young companies that come with the whole growth aspiration, shaky business model, their business anchoring on one or just two big factors that also they don't have control over, risky, man.
This is like I've been trying to word the sentence this entire time. Could you argue, this is for fun, I don't even agree with what I'm about to say, but could you argue that the same way that the current way that you're describing how companies should actually be valued was at some point not a thing, and then it became developed through financial acumen or whatever, could you argue that there is a momentum / era change, and that even though right now we're going through some rocky times, we're going to be part of a relatively new mode / medium of valuating companies where it's not necessarily about the fundamentals, like that perhaps this exponential growth promised in the near or far term future
But here's
is
the thing,
a
Brian,
new
though.
valuation.
Let me stop you there. You
Sure.
were a banker before.
Yep.
You know how a company used to get valued and still would be valued.
Correct.
You bake in future assumptions in that
Yeah.
valuation.
All the time.
But if your valuations start deviating from the actual money-making fundamentals to future growth and promises, in my book, that's speculation. That's not investing in valuation. That's a speculation.
But we've always invested based on speculation. I guess what I'm trying to say is, even in proven
Do
out
you
business
though?
models,
I'll challenge that. There is some element of speculation in terms
Yeah.
of top line growth and all that, but we do scenario building model for that reason. But you have to believe the fundamentals of the business and the value that you're bringing to the customer is real. Because if you don't, that's what you have Theranos. The underlying business model didn't exist at all. They were not bringing value to the customers at all. So I think there's two different points of it. You can always speculate whether the market and the product that you're marketing will pick up and scale to that level, but what you're delivering to the customer actually exists. Like, it is an actual value add
Sure.
to whoever uses this service and business. Like, you have to believe in that. And you also have to believe in that people will pay for that.
No, and I'm certainly not trying to compare like trading Bitcoin or pictures online to the businesses that I sold while in banking. And I think I'm a fundamental believer, and I'll say very proudly that the like utilities companies or the industrial companies or the business services companies that I supported in M&A are far, I don't want to use the word superior, but for lack of a better word, it's like superior business models than taking a cut. But I guess what I'm trying to say is, even in private equity middle market transactions where hundreds of $1 million are being traded for, to your point, like companies that actually do things, they are like at the end of the day playing hot potato. Like, someone will end up with that company in their hands and they won't be able to sell it for more. Like, there is a theoretical cap to, I sold this.
But isn't that what due diligence is about? That's why you acquire those companies and turn the company around, because you saw that the current status of that company, the way it's being operated, could deliver extra 5% margin if
Sure.
I were to take lead, right? And I'm just going to close this sofa. Like, that's why you bought the company in the first place.
Sure.
Right? So if you generate more margin, your cash flow will reflect that. And guess what? Value of the company also goes up, because every dollar you invest, I mean, you have to calculate ROIC to actually get the return on invested capital, but it's a positive sign if you actually increase the cash flow in a way. So while keeping your revenue constant, right?
Sure.
So that's the fundamentals of private equity in a way. Like you will never invest in an asset where you think you owning that for 5 years will not generate incremental cash flow or value add, right? And there are many ways that a company may buy another companies to accelerate their timeline on other businesses because
Sure.
there's synergy between the two and all that. So there's a lot of things, but those are tangible in a way. Like you're actually taking an existing one, making it better, or taking an existing one, incubating in a maybe a larger organization to propel the bigger agenda, et cetera, right?
Yeah, you're right. I'm solely doing this for conversation. You're right. I think especially when private equity makes investments, they are with relative utter confidence that they can turn the business around / make it more profitable at the end of the day. I think the only point that I'm trying to make is that, for example, I sold this pallet company, and this guy started in his high school garage. He took old pallets, like pallets that you put Amazon shipments on, and then fixed it and then sold it back to the companies over and over again. And then obviously with Amazon's growth, they also scaled. And this is public information. So they sold for like $280 million. And, Mr. Billy Bob XYZ is now like a millionaire through that. But, and yes, like theoretically, ABC private equity can take it, slightly lower margins, cut costs, whatever, and continue to grow. But I'm trying to argue that after a certain point, like Brian's Pallets is not going to be a global distributor of pallets, and there's going to be a limit. You're going to approach an asymptote as to how much cuts or cogs you could possibly decrease. Even that, honestly, I'm not comparing this to Bitcoin, but like even that has a theoretical limit that the growth promised by bankers aren't going to be obtainable. Like we would like exaggerate valuations all the time to like win business. And like, that's also not sustainable, not at the scale of which like growth companies are doing. But I'm saying even companies like that, I think are overvalued, and someone is going to be at the losing end of that stick at some point.
But doesn't that balance out the fact that there are companies that you erased and didn't take it as a client and they were heavily undervalued and you're mistaken?
Sure.
So I think at the end of the day, market will speak the truth as to how you did, right? Someone's going to be stick with that asset. Well, so let's take your example. Like, okay, Amazon bought that pallet service, right?
Sure.
You think Amazon's going to sell that pallet service to someone else?
For the near future? No.
Why not?
Because it's useful.
Okay. So they'll keep it.
Yes.
And they're getting usage out of it. I'm pretty sure they baked that into it. The fact that they bought that company versus them doing their own, I'm pretty sure them doing their own was far more expensive.
Yes.
So they actually derived value. Even at that your overvalue, it was still cheaper than Amazon would have done, I guess, by themselves.
Okay, but to continue to fully apply the analogy though, this is also a far stretch, I understand, but that's under the assumption that the logistical services that Amazon provides / delivery services is a market that will continue to at least sustain what it is now / continue to grow. And like, yes, conceptually, I understand that obviously people will always need stuff, and Amazon is at the forefront of that, but like that depends heavily on like our unending need for consumption and the fact that there will always be a growing pie for Amazon. Because for example, Amazon didn't infiltrate like Korea, like Coupang has Korea. There's clearly like geographical limits to how much a company can grow.
And why do you think that is?
Culture, probably.
I don't think it's culture. In fact, I think East Asians are more obsessed about delivery through their door.
Sure. I'm talking about Amazon's like business understanding of Korean. So you don't think it's a culture problem?
I think it's logistics, man. It's really hard to set up their own logistics network in different countries. They need to consolidate. It already exists, and you have to speak the local language. You have to get into local employment law, all these third party. And there's reason why Amazon have their own delivery service and less relying on FedEx and UPS is because you gain scale
Sure.
You can do a lot with the routing and everything, and you don't have to pay the cut or commission to distribute your product. Essentially, like you're just vertically integrating in a way. To be able to do that across multiple countries and multiple geography, it's tough. Unless the market's big enough to you for you warrant, and the demand is big enough for you to warrant and go in and invest and start your own logistics company there. That's just my view.
For slightly,
I'm telling you, if Amazon gets rid of the free shipping tomorrow,
sure,
that's going to be a big shift.
like if they get rid of Prime.
Yeah, I think it's also going to be a big shift. Like there are reasons why like people stick to that platform.
Sure.
Personally, I love the free shipping stuff. I buy
So do
stuff
I.
from Amazon that I don't really need immediately.
Yep.
It'll come in the next 2 to 4 whatever days, but it's free.
Yep. Do you think
But if they get rid of that and start charging me, I don't know,
You don't know.
$13, $14
Yep.
for $20 shipment, and guess what? That's what DoorDash and Uber Eats oftentimes does.
Yep.
I stopped using them. It's like it's not worth the money.
I read an article recently. It was titled like the end of the Gen Z discount era, and it was basically saying it was exactly what you always told me. But like these companies like Uber and DoorDash, they gathered all this investor cash, and for like a fair number of years, they were able to promise investors like, we'll get user growth, we'll get user acquisition. Don't worry about the cost right now. So they would just hand out basically handouts left and right to its users, like cheap rides, cheap delivery. Do it for 5-10 years, and they're like, oh shit, like we're not making any money. So at the end of the day, where does that go to? The bottom line. So now we're paying $30, $40, $50 for Uber rides because those discounts no longer apply themselves, and now they have to prove themselves to be profitable. And to your point, if an Uber is $50, I'm not going to take that anymore. I'm going to take the subway, and then you're going to start losing acquisition or users. I guess on that note, I want to try to make it more positive. Do you think then, you see all these stocks crashing, even the overall market, it's not just growth stocks, like the S&P's down. Do you think that we'll enter into like a winter of where these proven out business models like Walmart, all these recession-proof things, the Intels of the world will gain attention again and grow again? Or do you think like VCs are going to kind of play an ego game and continue to start investing again and trying to see if there's some boom out of a new unicorn? Because these, like, I don't think the Dogecoin model of instant success is going to go away. Like, people are growingly impatient. I would assume, let's say like the whole Web3 NFT stuff goes down, they'll find another new way of making new money. Like, do you think that new way will come again, or are people now smart enough to not fall for it again? Like, is the AMC GameStop era over?
No, new game, like all these speculative gambling behaviors will always exist, right? And that's why the regulators are there for it, so that it doesn't spread to the masses. And I think there's a lot of learnings that a public market could do with what's happening right now. The money's been so cheap, they've been pumping in everywhere. And then the speculative behavior on a lot of these companies bled into the public market. And it drove up a lot of the valuations of other companies too. So I'm pretty sure there's going to be learnings. Look, like we learned a lot from 2008, 2009.
Correct.
Right. We'll learn a lot from here too, which is like, VC money and a lot of like excess money from the low interest rate pumping into the market, fueling speculations and hyper growth, when a lot of those companies were not ready and immature to actually scale or have a stable business model, and it's all coming crashing down. Someone's got to pay for it, and I think general mass is paying for it with higher inflation. That's what's happening. Like the mass public is paying for that right now. To answer your questions on like, I read an article like a couple of days ago. Yeah, there is Fed and VC are effectively fighting right now in a way. Fed is like, you want to pump more money in, then I'll raise interest rates to curb that. I think Fed's going to raise interest rate even more. I don't think market's there yet, right? There's still no, I don't think the market has fully awoken to the fact that whole spending spree and pumping money into the market is over. That time is over. And I think what happened last week with the 0.75%, like that is a wake-up call, but I can see another one or two of those coming in the next couple months. If you think about it, and I don't know if this is right, but this is kind of like what I'm hypothesizing is there was a lot of money to be borrowed, and at a low interest rate, all those money got pumped into this quote unquote unicorns and future promises.
Sure.
And it went public. And if there's transactions, that means that some people bought into those visions too, but some people sold and got out of that vision, right? That's why the price tag exists. There was actually a transaction occurred at that price for that share of the company. Now, if that all came crashing down, that means that someone lost a whole lot of money. But someone was able to pull forward all that future dreams and then sell at that value and gain all that financial gains. Understanding of the private market is that it gives access to the mass public, right? The initial investors, the founders of those companies are very few compared to the numbers. So you could almost see the redistribution of wealth to the mass public who bought into those visions, to people who initially had that idea, cashing out on that vision in a way. So there has been a redistribution of that wealth happening at some level, at least for those companies that were promised hypergrowth. That's number one, right? So it's kind of richer gets richer and poor gets poorer in a way.
As always.
It's always. But like this event probably made that worse to a certain level, not at the entire economy level, but at a certain level that definitely occurred. And another one is interest rates been low. So someone's been lending them money, right?
Correct.
And people use that money to gain more money, right? And where do these banks and loan people get money to give out cheap loans? It's tied to the Fed, and it's also tied to more stable assets. Like it could be real estate, or it could be gas, it could be energy, right? Aren't all those things actually increasing in price right now?
Yep.
Because they got to pay for it. It's not free money. There's no free money. Someone's got to pay for it at the end. And in my mind, the way it works is that we pulled forward a lot of money that were available in the next 5 years, spent it all today on companies, invested in a lot of companies that were going to transform and being the next unicorn. A lot of them didn't materialize, but then all that cash was actually got transacted today.
Yep.
At the expense of a lot of public sharing the same vision and investing in it. So who pays for all this? The public did. And for me, that's where the learnings and the regulation, in my view, has to do some homework. I don't know what to suggest because I'm not expert in that. But the fact that like there's a fine line between a fraud business model and Ponzi scheme to something that you can sell and be responsible for. I think those two lines have been, in my view, a little bit blurred, especially during the COVID era, right? Where there's an investment hike. Too good to be true, right? You know, like Bernie Madoff, too good to be true. Still took like decades to find out. Right. If you look at some of these companies that went to spec and IPO, too good to be true. So my question is, we all agree that Ponzi scheme and all that is illegal. Yet selling a vision of a company that's too good to be true and garnering notable VC investors and backing of famous people is not a fraud. I think that's the learning that we need to have, right? Like where does it stop? I was watching a Shark Tank the other day, and Kevin Hart was there, and Kevin Hart is a very, very smart dude. Like there was this one idea that they pitched, is like they want to connect celebrities to ordinary people for 5 minutes, and then celebrities set their target amount, and then the platform will take a cut of that. But then Kevin Hart made a very good comment around, you are relying on a celebrity like myself to promote your business, right? And I will be the face of growing those markets, as well as all the negative that follows too. And so, like, the stickiness is based on the fact that there's enough celebrities, but enough celebrities promoting this platform. And he was right to call out that if that doesn't exist,
You're done.
your business model, underlying model, has no value to offer in a way. It's the same thing that I was telling you about Bitcoin too. It's like people don't believe in that Bitcoin. If you only have one driver to protect your entire business, and if that driver is gone, you have no business. So don't rely on a single product to build your business on, unless that product is a massive platform that bleeds into necessity.
Correct.
Of, like, for example, like, people will always buy toilet paper.
Yep.
Right? Like, but me getting an app to connect to some celebrities, if money's short, I don't have time to do that. Demand's gone. So I think there's a little bit of balance of, and that's why if you look at luxury goods, they spend a lot of money on developing that goodwill and brand name.
Sure.
Because they also know that the stuff that they make, like the purses, the shoes, the clothes they make, the cost of goods of that is higher than your normal Uniqlo t-shirt or whatever, but it's not that high.
No.
Like, t-shirt that sells for $500, the actual cost of this is probably less than like $10, $20, but people will pay the 500 because of the brand name and the reputation that it has. But guess what? Those don't come for free. And they actually invest a lot of money in marketing, like having popular celebrities wear it, like, and then have those brand names and create all these things like limited edition products so that it becomes more of a collectible. So they find their ways to make it, but to protect their brand, and because they know that that's what drives the profit of that business. So if you know what are the drivers of your business, you can focus on that. But it's multiple things, like even luxury goods, they have the brand, but then, generally the stuff you buy from them is actually better quality.
It is.
It is. So there's a value in that. There's also an experience. You walk into their store, like, it's a different shopping. So they have a lot of different angles that they tackle to survive and sustain their business. And that's where a lot of the effort goes in. And that's why you might want to invest. Some investor may want to invest in those type of companies if you believe that's actually, bringing value.
Sure. Do you think, I hit this question as you were talking about the wealth disparity that recently happened. I'm a fundamental believer that, rich people ultimately are pushing for not innovation, but they have control over a lot of where money goes and whatnot. And this era, past 2-3 years, I personally believe, and I'm probably offending some of my viewers, have made a lot of like not very smart people rich, and people that are not very like effort-based rich, because there's a lot of like lucky millionaires these days.
But dude, hasn't that been the case all the time?
Oh, sure. But I think it's become more popularized and more widely spread than ever before, just because like the access to capital has grown. Given that not all of them go bankrupt and not all of them continue to gamble, they will somewhat become new investors and new drivers, and there'll be success stories. And I'm sure the same way that back in 2008, like people who called it from the beginning and made money really quick from all these like big banks, they ended up becoming gurus or whatnot. Are you worried / do you have concerns over the reality that these people that made it rich through these are probably going to start the next scam, the next Ponzi scheme? And realistically, yeah, we talk about all these like growth companies failing or whatnot, but like Benchmark made $900 million off Uber. Like, to your point, these VCs get out at right times. They will continue to fund new things. And my like skeptical, like justice warrior side of me tells me like, yes, like there's learnings, but I don't know if people will forget. Like, something that I've learned in the NFT industry is people are very quick to forget learnings, and
Mhm.
they get distracted by the new next shiny thing almost immediately.
Here's a question for you. One, I don't really care because I don't compare it to myself to any other people, right? So if people want to make money and they get rich, that's their own problem. Good for them. Bravo. Um, your point is, I have a solution for you. I don't know if it's going to be a popular solution. Make more stringent rule on the IPO. All these VCs and also like people going to spec will have a harder time liquidating their initial investment to the public. Like access to public market is exactly that. You're able to sell off your shares as an offering. But an idea is that what if, I don't know, what if SEC just came out and said, you need to show a track record of making money for 4 consecutive quarters before you get listed as a share in public market? What if they said that? None of these companies that were listed would ever be listed. And it'll force the company and the investors to think about sustainability and profitability rather than speculative market projection. They may argue, I need all these capital, blah, 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 to grow the company and blah, blah, blah. Okay, fine. To protect the public investors, then you don't get to sell your share until company reaches profitability. Boom. It's a very hard, stringent rule, but it goes to the fundamentals of the valuation of the company. And it'll curb some of the speculative and fraudulent behavior that you're talking about. It's going to be wildly unpopular, right? Because it kind of restricts the time to market and everything. But that's just an idea. If you're super concerned that these behavior is going to impact the general public market so much into the future, then that's the job of the government, right? That's where regulation needs to step in. And I'm not the expert of it, so, but you know, if you want to shut it down, this type of behavior, there are ways to do it. I don't think there is a rule that says you have to be profitable to be listed in a public market today. Because there are companies that are listed that are making losses.
I feel very feel hopeless.
But like, look, it's we talked about this last time. It's like some of the FOMO is driving because you see people, look, expand your social circle too. Like you see people around you are very talented and also like probably like top 5% or higher, or, you know, and you see people making money here and there and then faster, like it's very toxic in a way. Like, unbelievably toxic. And there are always going to be some lucky dude or lucky gal that, you know, if I gave you $10 million right now, Brian, with the interest rate of 0.2, and then you bet all that in one blackjack and you triple that money.
Sure.
I mean, the outcome's the same. And like, there are always going to be people who are lucky, but I think I also believe that the luck accompanies those people who also try and stay on course, have firm belief where they're going. I believe luck will accompany you in that journey too. But there are going to be people who are going to be lucky no matter what. But I don't think that's the mass, right? Like, I don't think I don't think 900,000 out of 1 million people will get lucky. Maybe only 1 out of 1 million will. But then all the social media is making that as if so many other people are. And then this is the law of, because I did a lot of the statistical modeling in my background. Human empirical senses are very, very flawed because like you only consume what's around you. And if there's enough people saying the same thing around you, that becomes a general belief. And it's a very dangerous belief. So you surround yourself, Brian, to all these young and rich, successful people, you're going to believe that every young people are doing this and you're missing out. You know what? This is why I keep saying you should go to Korean Army, right? Go to the Korean Army, meet all these people from various backgrounds. You'll find out that you are very unique. Like all these other people are not even thinking at the same wavelength and they have their own life going on. And you'll be sitting there. It's like, yeah, I've been just, you know, a frog in a well.
Oh man, that's that's the advice of today. On God damn it. I unfortunately I don't want to say unfortunately I fortunately have to go do Jesus stuff soon. But I have a final question for you, and I'm going to put you on the spot. So try to not dodge it as much as possible.
Mhm.
Given everything we just talked about, clearly things are not looking that great, and things are not already that great. And like, yes, I'm gonna tie back what you just said. Yes, I'm surrounded by people that are interested in the economy. Like, I'm clearly in the general financial services industry, so people are like talking about how this is the end, whatever. Um, do you think two things? Do you believe that the worst has yet to come? Number one. And number two, if it has not, do you think it's too late to turn it around?
I'll answer that question like this. Why being worst is depending on what you believe. For me, this correction will expose those companies that never actually had a chance to become sustainable and profitable anyway.
Oh,
And it'll get rid of them from the surface of the market. It will only accentuate those companies that actually has firm fundamental cash flow business. So the overall market may still tank even more because there are still those companies that are left that still need to be wiped out. But once those are gone, investors with money will need to invest somewhere, and they will start investing in those. That's what the correction is all about. It's like redirecting this investment into less speculative behavior, but something that's more, a little bit more tangible and accessible and you can predict. And so it'll be a big win in my mind for a lot of companies that are actually have sustainable profitability and can generate cash at scale. So if you've always been investing in that, and I believe that's what Warren Buffett normally does,
yes.
they're in a very good shape because all these companies, they're going to flourish after when this is done. But if your investment has always been quick, innovative, tech, blah, 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 whatever, AKA ARK Fund, have you heard of it? You're kind of in trouble. Because a lot of those companies, not all, but a lot of those companies, I believe, didn't really have the fundamentals to scale and sustain and become profitable. They had the vision for it, but have they actually done that in the last 2-3 years? That's questionable. Right? So that's where I think the viewpoint differs, right? Like this is an opportunity for those companies that have been dwarfed because they were being true to their investors or the public to say, you know what? I'm only really going to grow 10, 20% year on year. And that's my best I could do. And I will still be sustainable and profitable. But they didn't get the limelight in a way. They were more of the hedge stocks for a lot of the investors, in my opinion. And then everyone went to tech stocks that's going to grow literally 50, 60, 100% triple digits a year. Well, I think that trend is going to reverse, right? And those listings may not even be there. And so the worst is yet to come for the stock market. Yeah, I think Fed may raise interest a little bit more and stock market will probably go down. I don't know. I've always said Dow is going to go under 30,000.
Sure.
Even a year ago, it's already under 30,000.
Yep.
It may go down a little bit more, but the good thing is the stock market still has a majority, very stable, proven businesses there. They're going to hold a fort. They're gonna get investors' money and they're gonna grow, and it's gonna be, I think, positive thing for a lot of these companies, right? So less distraction of this small $100 million company become the next, big unicorn, but more on driving the actual innovation at a sustainable pace. I think people have just been very impatient in the last couple of years. They are seeing, like, if I talk to some of the, like, when I hear some of these wealth advisor talk about is like, oh, like we're expecting like 12, 13% return year on year. Like, I mean, that has never been the case. Like it's been 6, 7% for the last long-term study. You're saying 13, 14, like double the growth. Like what happened? It's like, oh, but if you look at the last 5 or 6 years, yeah, but last 5 or 6 years,
Sure,
was not the norm.
no.
And the fact that you're expecting that to go on further, it's like, come on now.
So you're saying worse is yet to come in terms of stock market, but to your very good point, this was inevitable. It's been expedited again.
Hey, a lot of people saw the 08, 09, 010 crisis come.
True.
You read the literature, Goldman knew.
Yep.
I'm pretty sure a lot of people who are at the heart of all this making also knew. It's just that the public is always late to find out. That just has always been the case, right? Because as I said before, 1, 2, 3, or even 10 companies going from nothing to $1 billion is not going to move the $1 trillion market. What it moves is that when those companies make it to the public and start having a market cap has a combined of a couple $100 billion and $1 trillion, that's when it becomes a problem.
Yon, any last words? Not for the for the video, not for life.
For the video.
For context, I think a lot of my viewers recently, people are, because it's already summer, like the internship recruitment season is over. They don't really care about jobs right now. It's more about like, what should I invest in?
But don't you think like job hiring and job layoffs are going to come more? I think it's going to.
That's what I was going to ask. Like, that's what they're concerned about. I think longer term stuff, not immediate term.
I mean, as economy still, I mean, look, hiring is still going to be there. It's just that hiring from those companies that are about to go bankrupt is going to freeze over. And a couple of things, like in investing, for me, I'm more of on the conservative scale in a way. Like, yes, there's a portfolio in my investment that are always going to be speculative or more of a big bet. But the portion of that is very, very controlled and restricted, right? Because, and I always stick to the fundamental valuation principles, right? And I'm a big fan of how Warren Buffett thinks about investing.
Sure.
And in terms of like career-wise, just think about, yes, it is very enticing to go after this shiny new area, hyper growth. You'll learn a lot, blah, blah, blah. Depending on where you're in your trajectory. If you're like in your early 20s, like yourself, Brian, go for it. Learn as much as you can, but don't get caught up the fact that you may come out of this learning experience with zero net gain in terms of financial.
Correct.
In terms of financial, but you'll learn a lot of the skill set that'll propel you to get better job and even start your own company in the future, right? I think that's what I want to tell. The expectation of you going into a high growth company, don't think that you'll become like one of those millionaire, billionaire coming out. You may, but you're a part of the statistics, and the statistics tells that most companies failed and succeed. So just have that in mind. The company that you're joining has a higher chance of failing down the road than actually succeeding. And just be mindful of that. The picture may look great. It's like, oh, I secured $1 billion in funding. You know what? It doesn't matter how much funding you secured. If a company burns through $250 million a quarter, that money's gone in a year. So don't get enticed by people telling you, like, oh, I have this many funding, blah, blah, blah. Really look into what is the product and services are they actually delivering and building? Is that actual value add? Is that actually sustainable? And can we be profitable? Like, if you think about those 4 things, and if you still believe in all those, go for it.
Sure.
But it'll be really, really hard to find a startup, in my mind, that actually thought about all those 4 things, especially the sustainability part. So,
well, yeah, thanks for your time. I will be
now go pray.
I'll go pray about my NFT portfolio and go into the Korean army soon. I feel like Chung, whenever I talk to you, I feel both like encouraged and stressed at the same time. It's a great
Why are
feeling.
you stressed?
Why am I stressed? What do you mean? Why am I stressed? What did we just talk about in the past hour? I think I'm less personally stressed. I have like this weird, unnecessary, like probably an arrogant like burden of like feeling of burden of like I feel bad for because dude, like people are gonna get screwed. People are screwed. I have people around me who are like not that well off that have like bought into this like Coinbase propaganda and have someone told me yesterday he was like I lost like basically a down payment on Bitcoin and like it's basically it's exact same thing as 08. It's like mortgage-backed securities except now they're investing in memes and like that bothers me. Like it also bothers me that like I am somewhat not even somewhat I'm directly curating a thing and like I don't know. I don't have to go there, but
Dude, don't think about money at your age. Like money will come, and that's all I can say. Like, look, take it from me. Like my first job was at when I was 30. Before that, I was making like what? I made almost nothing until age 26 because I was a grad student, and I went to Korean Army after that for 3.5 years, and I made like maybe 20K a year. And my first job with McKinsey wasn't until I was 30. And you're what, 25? And you're making probably more than 20K a year, living in New York City, not some
Correct.
suburban city like that you never even heard of.
Correct.
So like I'm just saying, like you actually have a lot more potential. And if I were in your shoes, like just embrace it, live life, but don't think about it. You'll make your money and keep those people who brag about money and becoming a millionaire and you're in 20s or whatever, just cut them off. Like you don't need to hear that. And the thing is, the less you start comparing with other people, the more happier it is. I think I told you this a million times, right?
This is the exact same ending of the last video.
Yeah.
Like exact same.
And that's my secret recipe of how I stay,
I
I
know it
think, a
is.
lot more carefree and happy is that I actually don't care about what you do. It's like if you want to partner and have a fun building businesses or do whatever, let's do it. But like, I don't want to compare myself to how you live your life.
You're right. You're right. You're right.
It's like I think that's a danger that a lot of people fall into. It's like, oh, look at that person getting promoted so quickly. Look at that person just invested $1 million and become a billionaire. First of all, if you really like that life, why don't you do the same? Go for it. What's stopping you? Right?
You're right. All right. I'm gonna go tell Jesus my problems.
Meditate
I'll meditate.
and take time to put your thoughts down. And sometimes what helped me when I was young, like, cause like it was actually really tough for me to actually go through all the army thing, when you actually have like better job lined up for 3.5 years. But every day I just tell them that, you know what, like this is just going to be a life experience. I'm going to learn something from this and it's all going to turn out to be positive. And guess what? It did.
Huh.
It made me more patient. And the people that I met during the 3.5 years, or I still keep in contact with them because they're my reality check, by the way. Like those are the people that I would never really met in my lifetime if I hadn't been in that job.
Mm.
And then now I'm back into this high academic or whatever, McKinsey or Google society. The people that I meet are fundamentally very, very different from those, right? So there is a value in expanding your social circle, and also keep in mind that the people that you interact day in and day out aren't the representative population of the world.
Mm. Amen.
All right. You have a
God.
good weekend. And also, do you have day tomorrow off too?
We do not. Controversially.
Okay. I have a day off tomorrow.
Yo, thanks for your time.
All right.
Let's do this more. I actually, to the extent that you're free, like I want to make this kind of regular because it costs me, it costs you nothing. Cool. All right. Yo, thank you.
Have a good one. Bye.
Bye, guys.